Let me just record this session. Okay, I'm recording this session so that whenever I need to go over these lessons again, you can find them on my YouTube channel.
All right.
Okay. Before we begin, I first want to find out how much you know about Forex, like where you stand. Have you done research in the past before?
Yes, I did the research.
How far did you go?
I only did it on the synthetic, the indices.
Oh, I see.
Yes.
Have you placed a trade before though?
Yes.
You have?
Yes.
Okay. So do you understand things like lot sizes, pips, what leverage is, and the basic types of currency pairs? Do you have any idea how those work?
On the pairs, I would lie.
Okay.
I don't have that much knowledge on the pairs.
What about leverage, lot size, pips?
Only have an idea on the pips. I think the pips. I only have an idea on the pips.
Oh, I see. Okay. Okay.
Yes.
The stuff we're going to focus on today are based on fundamental analysis. Now, fundamental analysis is a bit different from what you've been researching on. With this type of trading, we only trade when there's a news event happening. Now, what the news event is it's just when a country releases a report that contains economic data. Now, that data is pretty much based on how the economy is doing, like the GDP, the PMI, interest rates, and so on. How the economy is doing and how they think it will be doing in the future, and so on. Now, when these reports are released to the public, investors tend to pour in money or pour out money sometimes from an economy. Now, this activity is what causes price to move, a currency pair to move. Now, these same movements are what traders, fundamental analysis traders. I hope you've understood.
Okay. Yes.
Okay.
So in short, it's only you only deal with news, the events in short.
Exactly, yes. We only trade when there's a news event.
Okay.
Yeah. Now, the strategies that that are in this package, there's two strategies. They're both based on fundamental analysis. Now, the first one I'm going to be looking at the easy SNB. This one
is NB?
Yes, easy SNB. SNB stands for sell and buy. The whole idea of the strategy is to hedge the trade so that whichever direction price goes during a news event, will be on the safe side. So pretty much a buy and a sell at the same time. So like I said, whichever direction price goes will be good, will be on the safe side.
So this strategy, you mean that you place an order on the buy and on the sell on the same market?
Yes.
Okay.
Now, when it comes to the SNB, we don't place direct buys and sells. We place what are called buy stops and sell stops. Yeah. A buy stop and sell stop, these are future trades that you're placing. What they basically mean is that they tell your broker to place a trade for you only after price reaches a certain point in the market. So like, for example, your broker is going to wait for price to increase to a certain point before they actually place a trade for you. Then a sell stop is basically the opposite. They wait for price to drop to a certain point before placing the trade for you.
Yes.
But you're going to place both buy stops and sell stops, so that whichever direction price will be on the safe side.
Okay, during that event, so in short, you're saying you place the buy stop and the sell stop in the market.
Exactly.
So whenever event occurs, it either goes to the sell or the buy.
Exactly, yes. That's the whole idea.
Okay, I've got the point.
Yeah. So yeah, that's what the SNB is there for. So I'm placing one buy stop and one sell stop. So pretty much placing a buy and a sell. Now,
Okay.
by us doing this, we're hedging the trade. Now, when it comes to the specifics of placing the same orders, we place them 10 pips away from price's current position. Now, a pip, if you remember clearly what it is, a pip is just a way that we determine how far prices has moved, or how far price is moving in real time, and so on. It's just a measurement of price.
Or it's a measurement of price.
Exactly, yes.
Okay.
So we're going to be placing the buy stops and the sell stops 10 pips away from price, its current position.
Okay.
Yeah. Do you know how to add and subtract pips?
No, I only know using a PC, but only on the synthetic indices.
I see. Okay. Okay. For currency pairs, let me just add one more slide to the lesson.
Okay.
Okay. So for currency pairs, this is how price looks.
Yes.
Well, let me explain the types of currency pairs. That way it be easier for you to understand. There's two types of currency pairs. A currency pair like this, where there's no Japanese currency in it, which is JPY. So a currency like this, where there's no JPY, it's called a non-JPY pair. Now, non-JPY
Okay, a non-JPY. Yes.
Go on.
Okay, I've got the point.
Okay. So for non-JPY pairs, the prices are quoted in 5 decimal places. That just means there's 5 digits after the decimal place.
Yes.
Then for JPY pairs, a currency pair that has got JPY either on this side or on this side, it's called the JPY pair. Now for JPY pairs, price is only quoted in 3 decimal places. So these 2 decimal places at the end, they won't be part of the price. The price will only end here up to the 3rd decimal place. So for non-JPY pairs, it's 5 digits. Then for JPY pairs, it's only 3 digits, and so on. That's one way to tell them apart. The other way is just by looking at the value. If there's no JPY, it's automatically a non-JPY pair. If there's JPY, it's automatically a JPY pair, and so on. Now, when it comes to the pips, we'll start with the non-JPY pair. When it comes to adding and subtracting pips, we always start from the second last decimal place. The last decimal place here, the 5th one, it's useless to us. We don't need it when calculating pips.
Okay.
So in calculating pips, we always start from the second last decimal place here. The reason why we ignore the last decimal place is because it's too small for us to consider. This is where points begin. Points are also movements in price, but they're too small for us to consider. They're not that important to us. So pips begin here. So if this one becomes a 2, for example, or let's say a 3 instead, that means the whole price has gone up by 2 pips.
Okay, so it means when that one reaches 3, that means it meant 2 steps,
exactly,
which is 3.
Yes, which is 2 pips.
Okay.
Yeah, so that's what a pip is. It's just a movement in price. So when adding pips, let's say we want to add 10 pips to this price here. We're going to put the 1 here on top of the 3rd last decimal place. And we're going to put the 0 here. Then we're going to add.
Okay.
So adding 10 pips to this, the total price would be 1.1171. Because if you move this one by 10 positions above, you are now going to start adding to the next position. I hope you've understood.
Okay, wait a minute. You said, so when that one reaches to 10, which is 0,
yes,
it gives
the
6 1.
Exactly, yes.
Okay.
Now, since it has moved to 10, that's 9 steps. If you move it one more step, make it 10 pips, it becomes a 1 again.
Yes.
While this one becomes a 7. Yeah, so it's basically like kilometers. So 10 of these make up one of those. Then again, 10 of these make up one of those, and just like that, just basic mathematics.
Okay, I got the point.
Yeah, same thing applies with this. 10 of these make up 1 pip. In short,
Okay.
10 points is equals to 1 pip. Now, points are the same thing I was talking about. They are too small for us to consider. So that's why I always choose to start from pips.
Okay.
Yeah. So that's how you add pips. When subtracting, the same thing as well. You put the 1 here and the 0 here. Then the total price is 1.1151 below, and so on. Yeah, so the same rule applies with JPY pairs. If a currency is quoted in, the price is quoted in 3 decimal places like that. The last decimal place is useless also, because that part is what
points begin. Okay, yeah.
Exactly. So in that case, you focus on the next decimal place closer to the decimal.
Okay.
That's what it begins.
Okay.
Yeah, so in placing the buy stops and the sell stops, you place them 10 pips away. So for the buy stop, it's going to be 10 pips above price's current position. Then for the sell stop, it will be 10 pips below price's current position. So pretty much what you're saying is that for a buy stop, if price increases by 10 pips, that's when your broker should place the trade for you. Then it's the same also. Price should drop 10 pips before your broker actually places the trade for you, and so on.
Okay.
Yeah. Now this whole thing of putting them 10 pips away, it makes the strategy less effective, but safer when the news event doesn't move. Because when the news event doesn't move, none of these get triggered. So you don't make a loss, you don't make a profit. Everything is just the way it was, and so on. You can just no losses. But when an event, you've understood?
Yeah, I've gotten the point. So the whole concept of this, it's that when the event occurs, the market will react in some way.
Yes, it will.
So if it reacts to the buy, it triggers the buy.
Exactly.
If it reacts to the sell, it triggers the sell stop.
Yes.
Okay.
Exactly.
So if the market react, it won't trigger any of the two.
Yes, it won't. It won't trigger it. So you still be safe in that case. But in as much as you'll be safe when the news event doesn't move, when it does move, you are pretty much giving away 10 pips. Now, this giving away of 10 pips, that's what makes it less effective as compared to the other strategy we're going to be looking at. I'll explain more on this when we reach that strategy.
Okay.
Okay, we can move on?
Yes, we can move on.
Okay. So when it comes to the AZSMB, it's got its own list of news events you can trade it with. This is the list. There's CAD GDP, which is just the Canadian currency. Then there's GBP GDP, which is pounds. There's AUD interest rates, which is for the Australian dollar. Then there's GBP PMI, which is again for pounds, Great British pounds. So when I say GBP, just know that it's pounds we're talking about.
Oh, Great Pound.
Exactly, yes. Then AUD, that's Australian dollar. Euro, that's euros, obviously. Then there's GBP interest rates, and so on. It's like now there's 1, 2, 3, 4, 5, 6, 7 news events you can potentially trade with the AZSMB. Now, the reason why it's this list is because these lists, in as much as they are powerful as compared to like other news events, sometimes they move, sometimes they don't move. So the AZSMB is that for the times when they don't move, because when they don't move, you don't lose anything. But when they move, you make it, and so on, just like that. Then for the other strategy, which is called the Extreme SMB, it's also got its own list, but you shouldn't mix the strategies up. I'll explain why you shouldn't. I'll explain it out.
Okay.
But anyway, for now, this is the only list that you should be using the AZSMB. So what I'll do is I'll send you a screenshot of all this on WhatsApp so that you can use it as a reference.
Okay.
Yeah. Do you have any question going forward initially?
The news event, do they occur like once in a week or it's every day?
They occur once every month. So you can find, for example, this week there's these 2 events. Then next week there might only be 1 event. Then the next week after that, all the events are going to happen in 1 week and so on. But in total, there's 7 for this strategy. Then for the other strategy, there's also 7. So 7 plus 7, that's 14 times you'll be trading per month.
14, which is 14. Okay.
Exactly, yes.
So in short, 14 events in a month.
Yes, that's the number of times you're going to be trading.
Okay. So can you manage trading while doing school?
Yes, because when you're trading, you only spend about 5 minutes doing it. So if you're in class, you can just ask the teacher, excuse you, you go to the bathroom, you trade real quick, then come back. So it's very much.
Okay.
Yeah.
I've understood. Thank you. Can move
on. Okay. All right. So moving on, the next strategy we're going to focus on is called the extreme SMB. As you can see, it's also an SMB strategy. Now, this one, the idea is also to hedge, but we'll be doing it in a different way. This one will be utilizing 2 trading accounts at the same time. So if you've got an account with, let's say, Deriv and Hotforex, you'll be using both trading accounts at the same time, side by side of each other.
Okay.
Now, the secret of this strategy is to place a direct buy in one account, a direct sell in the other account. So since you've got 2 accounts, one account have a buy, the other one have a sell, and so on. It should never be buy or sell. They should always have opposite trades. So one could be a buy, the other one could be a sell, or it could be a sell and a buy, and so on, just like vice versa. I hope you understand. You're following?
Yeah.
Okay. Yeah, so direct buys and direct sales. You should always just place one of each. So one account, one buy. Then in another account, place one sale only. One position is enough. Don't split them up into 10 positions, like 10 buys and 10 sales. You may as well just put them into one so that it's easier for you to close.
Okay.
So yeah, 2 accounts. The whole idea is to hedge the trade. So we're buying and selling. Now you might be wondering, if we're buying and selling, wouldn't that just cancel the profit out? And the answer to that is no, you won't. The reason why is because of this thing called leverage. With leverage, what happens is, obviously in one account you're going to lose money, right? Now with leverage, in the account where there's profit, it will allow you to recover what you lost plus much more on top. The reason why is because leverage allows you to buy a larger amount of currency with a smaller deposit. So let's say $10, you can have the buying power of like $10,000 and so on. Now, if the power of $10,000, you can easily recover the $10 loss that you make in that account, plus much more on top, and so on. I hope you've
okay.
Or maybe I should give a better example.
Okay, yeah, you can give an example.
Okay. Leverage. You can think of leverage as like a loan that your broker gives to you. Now, leverage is quoted in ratios. So if you deposit $1 in your account, your broker can loan you up to 1,000 times whatever you've deposited in your account. So with $1, that $1 will have the buying power of $1,000. So while you're trading $1, you can be having the profit of $1,000. The profit of whatever $1,000 will be making you. Now, since you can only lose up to the amount that you deposit in your account, in the losing account, you only lose $1. But in where there's profit, you gain $1 plus much more on top.
Okay, the loss that's in the other account will be recovered in your
Exactly.
profit account.
Exactly. Plus
Okay,
much
okay.
more on top.
Okay, I got the point.
I can go much deeper if you
Okay.
want.
Okay,
Maybe
I've
that's
understood
something.
because I never used to understand leverage, because I would see they would say I've seen different brokers with different leverage.
Yes.
There's other brokers would say 1,000, others would say 500. So the time you explained, now I've understood the point, because I never used to understand that.
See, so you can pretty much think of it as like a loan that your broker is giving to you. Because you
Yes.
notice that with a larger leverage, you'll be able to open a bigger lot size. Now the only
Okay,
way.
so in short,
Pardon?
In short, when choosing a broker, you also have to look at the leverage.
Yes, 100%, especially for this strategy and the other strategy if you want. With this one, the minimum leverage is 1 to 1,000, because 1 to 1,000 is the minimum leverage that you need to recover what you've lost in other accounts and make profit on top. With a leverage of 1 to 50 or 1 to 500 or even 1 to 100, you might not recover what you've lost in the other account. You might just break even or even make a net loss overall because you're not accumulating profit fast enough. So with this one, the minimum leverage is always 1 to 1,000.
Okay. Okay, I get the point. So in short, when you're getting this opening the brokers, I should make sure that the both leverage should both of the accounts should have the same leverage.
Exactly, yes, 1 to 1,000.
Okay, so if for instance, and the other account has the 500, the other account has the 1,000. So if I'm making a loss in a 1,000 and making a profit in a 500, it means that my profit will be accumulating slow. That's what you're saying.
It's accumulating very slow.
Okay, I get the point now.
Yes.
Okay.
So yeah, leverage 1 to 1,000. Some brokers offer even up to 1 to 3,000. That's even better because you'll be accumulating profits 3 times faster because you'll be able to open even larger lot sizes.
Okay, I got the point now.
So yeah, do you have any more questions before we move on?
No, I've understood.
Okay, so that's how the easiest SMB works. Sorry, the extreme SMB. That's how it works. Now, one last thing I need to touch on is, since there's 2 trading accounts that we're going to be focusing on, in the last account that you're in, if you notice that the event has clocked and everything becomes red, just know that that's the losing account that you're in. Now, when you see reds, you're supposed to switch to the other account. And since there, you had placed the opposite trade, there's obviously going to be profit in there. So that's the account you're going to focus on, where there's profits. Because where there's losses, the whole idea is to blow it, is to lose everything that's in it. Then switch to the other side and focus on.
Okay.
So yeah,
so,
when you switch, pardon?
I've got a question.
Yeah, go ahead.
So how long does the event stays, or is it a short period of time, or if it's in the sale, you can still hold the trade or you can just cut it like for a few minutes or so?
It's a really short period of time. Let's say the news events at 13 hours. At 13 hours exactly, you're going to see a spike happen. Now, in most cases, it only spikes once. It doesn't continue going up, or if it was a sale, it doesn't continue going down sometimes. Sometimes it even reverses. So what to do in this case is that the moment you see blue, just close all your positions immediately because it's most likely reached its maximum height or its maximum depth. So you just
I get the point. Okay.
So in this case here, when you're in the losing account, when you switch the other side, where there's profit, when you confirm that there's blue everywhere, start closing the positions immediately. Just get what you're giving. Yeah, just start looking. and so on.
Okay, get the now.
Yeah, so that's how the extreme SMB works. Then when it comes to
Okay.
the news events for it, this is the list. I think you can even see that the list is different. For the easiest MB, there's PMI, there's GDP, interest rates, but with the extreme SMB, it's different. This one has AUD
Okay.
GDP, NZD GDP. There's no GBP GDP or GBP PMI or AUD interest rates. None of those are in this list here. They're all separate lists.
Yeah.
So this is the news. This is the list. The reason why I said you shouldn't switch strategies for the list is because for the extreme SNB, if we use it for, let's say, this news event here, for the easy SNB, if we use the extreme for this event and it doesn't move, since with the extreme we're placing direct buys and direct sales, you have to pay the broker the commission there and then. Even if it doesn't move, or if it moves, regardless, we have to pay the commission. Now, if this news event doesn't move, that means we would have made a net loss overall. As opposed to the easiest SMB, wouldn't have made anything or lost anything. But like with the extreme, direct buy and a direct sell, we have to pay a commission still.
Okay.
Yeah. Then for the easiest SMB, why you shouldn't use it for this list here, for the extreme SMB, is because this news event, this list of news events, they are known to move almost all the time. Now, if they move, you'll be giving away 10 pips. That means you pretty much be losing 10 pips. Now, if your lot size is lot size 1, that means you'd have lost $100 that you could have used, that you could have gained if you had used the extreme SMB. So with the extreme, it's just best to use it with this list so that we mute every single pip movement that happens.
Okay.
Yeah, so exchanging strategies for the lists, it doesn't really make sense because of these same rules.
Okay.
Yeah. Do you have any questions?
No question.
Okay. All right, then I think we can move on to MetaTrader. Have you seen this app before?
Yes.
Okay. This app is what I'm also going to be using for the trades. Now, when you first open the app, you land on this part here, the code section. This part just lists currency pairs. Now, in some cases where like, you want a currency pair, but it's not amongst this list here. What to do to add it to this list is just by clicking on the plus. Then you'll be given a list of files that you can look through. Then in those files, you will most likely find the currency pair you're looking for. So to add it to this list, just tap on it in those files, then it's going to add itself automatically here at the bottom.
Okay.
Yeah, so code section is pretty much just for currency pairs. Then the next part is the charts here. Now, charts aren't really important to us because they don't help us know when exactly we're going to be trading, because we don't deduce any patterns from it. We don't look for any patterns.
Okay.
When to place buyers, when to place sales, and so on. So it's pretty much useless to us unless we just want to see how far the candlesticks are elongating or shortening in real time during a news event. But otherwise, in general, it's not really useful for us. Then the next part is this part here, the trade section. Okay. The trade section, here is where your focus is going to be, because you're able to see your net profit and net loss, and also see your positions. So if you've got 2 buy stops, you'll see 2 buy stops. If you've got 1 buy stop and 1 sell stop, you'll see them here, or under positions. Then besides that, you can also see your balance, your equity, your free margin, margin level, and margin, and so on. Now, here you can see it's blue everywhere. There's no red. What this means is that we've made a net profit. Like all our positions totaled up, we've made a profit. But like if you see red, that means if you add your positions, you're in a net loss, you're in the negative.
Oh, so read it's loss.
Yes, when you see red, that means you are losing. Your trades are losing.
Yeah.
Or you have a net loss. When you add all your profits and losses, there will be a negative figure, which is a loss. Then when it's blue, that
Right.
means all your trades are profitable, or most of the trades. If you add them up, your total will be in the positives. So yeah, this is where focus is going to be. If you see there's blue, start closing immediately. If you see there's red, especially for the extreme SND, if you see there's red, switch to the other side, and you're going to see blue in the other account. Then when you see blue,
Okay, so
start closing the positions.
okay. So how many position do you advise to open?
Just one position.
Or just one position?
Yes.
So immediately when I see blue, I close the position.
Exactly, yes. As long as the news
Okay.
has blocked. Like for example.
So if it's
Pardon?
For example, if it's the news event is at or 12, so immediately 12 hits, the market will react.
Yes.
So when it hits my enters my profit, I just have to close it.
Yeah, you have to close it immediately because sometimes price reverses. So if you decide to get greedy and increase and wait for your profit to increase, if price reverses, that means you now start losing money. So it's just best the moment you see blue everywhere, you close immediately.
Close the. Okay, I get the point. So this strategy, you don't have to be greedy. You don't have to hold the trade.
No, you don't hold. Greed shouldn't exist. Just be patient because there's these events every month.
Okay. I get the point now.
Yeah, so this is where focus is going to be. Then the next part is just history. History, this is how it shows. So it shows you the deposit, the balance. It also shows you withdrawals that you made, deposits that you made, and your previous positions that you closed. They're all going to appear at the bottom here. Then yeah, you can even filter and so on, just like that. Then the next part of MetaTrader is news and messages. For these two options, I've honestly never used this before. They are pretty much useless to us. They don't give us useful information. So yeah, just to cover these two. The only thing that we're focusing on are these four, the first four.
Okay.
Yeah. Okay. Now, when it comes to actually placing a trade, from the trade section here, what to do when you want to place a trade is click on the plus icon here. The one that looks like then you're going to be taken to this part of the app. Here it shows you the type of trade you're placing. In this case, it will be an instant execution. And below that, the lot size. Pardon?
Can you try to zoom in a bit?
Yeah, sure. Is that good enough?
Okay, I can now see.
Okay. So yeah, the first part just shows you the type of trade that you're placing. Then below that, that's why you enter the lot size. Then this part here, this shows the ask price and the bid price. So the other way around. The bid price is the smaller number here. Then the ask price is the bigger number here. If you want another way to tell, is just by looking at this, like a mini chart here at the bottom.
Yes.
This mini chart here. The ask price is the price that's in red. The bid price is the price that's in blue. So if you look at this,
so the ask price should always be bigger than the bid price.
Exactly, yes. It should always be bigger or the same. It should never be the other way around. The bid price should never be above the ask price.
Okay.
Yeah, it's either they should be the same value or the ask price is bigger than the bid price, and so on, just like that. So yeah, this just shows you the prices. Then below that, there's the stop loss and take profit. Then below these two things, there's the deviation. Now, stop loss, take profit, deviation, these three options aren't useful for us. at this point. The reason why is because we have a limited number of time for us to actually place the trade. Now, if we start calculating the stop loss, the take profits, deviation, all this might chew into our time and end up making us miss the needle. So for beginners, this is pretty much useless for us. Later on, when you advance, that's when you can now start focusing into it. You can now start considering indirects as well.
Okay.
So the first strategy we are going to be focusing on is the easiest ND. When you want to execute the easiest ND, this is not the option that we want. We need to change this to buy stop and sell stop. So to change this, you just simply tap on it. Then the drop-down menu is going to appear. It looks something like this. Now in this menu, the last two options are what we're going to be focusing on: buy stop and sell stop. So we'll place them one by one. We'll start with the buy stop. So just tap on buy stop, and then you'll be taken to a similar part here. Now for buy stop, we're only going to be focusing on the lot size and the price here. Just give me 1 second. Okay, sorry about that. So when it comes to the buy stop, we're only going to focus on two things: the lot size and the price. Like I said before, these three options, we're going to ignore them. So lot size and the price, these are the only two things that we're going to focus on. Now on the lot size, assuming you've calculated lot size to be lot size 1.0, we're going to leave it like lot size 1. Then we're going to move on to price. For the lot size, I'll send you a video showing you how to calculate lot sizes at the end of the lesson. It's uploaded to my YouTube channel, so I'll send you a link to that. So for now, if this is the lot size that we've calculated, we're going to leave it like that. Then we're going to move on to price. Now on price, one thing to remember about price for buy stops is that we always focus on the ask price, or rather the bigger number between these two numbers here. We always focus on the bigger one.
Okay.
Now,
that's the
pardon?
That's a buy stop that you have put on the top there.
Yes, that's buy stop.
Okay.
For buy stop, what we're going to do is we're going to click on the plus. And what the plus does is it just gets the ask price, which is still the bigger number here. It gets the bigger number here and drops it down for you here. From there, it will be much easier for you to add 10 pips to it. The reason why is because when the market is open, these two numbers move in real time because price is almost always moving.
Oh, it's fluctuating, yeah.
Yes. Now for you to get one single number, you click on the plus and it's going to get the last known number here and it's going to paste it down here for you. From there, it will now be easier to add 10 pips to it because it won't always be changing. It won't be changing. Now, adding 10 pips to this, if you can remember what the logic that we did before, we had put the 1 here and the 10 here. Then we added overall. So the total number when you add 10 pips to this price is going to be 1.1781. So 1.1781, the number that's here, that's what we edit it to. Now, since we clicked on the plus, this number here is what's going to be here. So we need to edit this number that it brought down for us to 1.1781. After changing the price to 1.1781, we're going to skip all this and we're going to place the order immediately.
Okay.
I hope you're following.
Yes.
Yeah, so you enter your lot size, click on the plus, it brings the number down here for you. Then from there, you add the 10 pips, you come up with a total, then you're going to edit the number that's here to the total that you just calculated. Then when you're done with that, you click the place button at the bottom here. So yeah, after clicking on place, you'll be taken to the trade section of your app here, and you'll be able to see that your buy stop is placed here with the lot size 1.00. So for the lot size, we're done. We now need to place a sell stop. To place a sell stop, we repeat the same steps all over again. We click on the plus, that looks like a SIM card. Then we go to this part of the app. Then we need to change this to sell stop. So you tap on it, drop down menu, but this time we're going to select sell stop at the bottom here. So you tap on it, then you'll be taken to a similar page as the buy stop. Now, this part is correct now. We're done with that. We now need to move on to the lot size here. Now the lot size should always be the same as the buy stop. Since the buy stop we had put lot size 1.00, we're going to maintain the lot size as this 1.00 for the sell stop as well. Then we're going to move on to price. Now for the buy stop, we had clicked on the plus here. For the sell stop, we're going to do the opposite. We're going to click on the minus.
Minus.
Yes, the minus does a similar thing, but except for it, it gets the other number here, the number that's on the left. Or in short, it gets a smaller number between the two. So it gets that number and drops it down here for you. Where it will now be easier for it to subtract 10 pips from it. So in subtracting, we put the 1 here and the 0 here. Then the total number to come up with will be 1.1759. That's the number that you're going to edit this number to.
Okay.
Then you're done editing it, you're going to skip these as well, and immediately click on place. And just yeah, so you'll be taken back to positions where you'll now be able to see that you've placed 2 positions, one for sell stop and another one for buy stop. So 2 positions in total. That's how you execute the SMB. Do you have any questions?
No question.
Okay. 21.6. Okay, we're even approaching 1 hour. Okay, let me just explain how to execute the extreme SMB. Then in the next session, we're going to enter into these other slides for the cloak and investing.com. Okay, so quickly moving into the extreme SMB. We always start from the trade section here. Or rather, we first select the currency pair. Then there's going to be a menu that's going to pop up here. And it will say trade. The part where it says trade is where you're going to click after selecting the currency pair. So when you click on trade, you'll be taken to the same part here. This part where there's insert execution, the lot size, the stop loss, take profit, deviation, and so on. Now for the extreme SMB, this order that's selected by default, that's the one that we want to go for. Now sometimes it's not instant execution, it's market execution sometimes, which is almost the same thing, but it's good enough. So the default selection, that's what we're going to keep as the option here, instant execution. Then we're going to move on to the lot size here. Now lot size, assuming calculated the lot size 1.00, we're going to leave it like that, 1.00. Then in one account, we're going to click sell. For this account, we're going to click sell. Then after clicking on sell, you'll be taken back to the trade section here and you'll be able to see that a sale was placed for you. So after you see this, you now switch to the other account and you repeat the same steps all over again. You select the same currency pair. Then in the menu app going to show up, you click on trade. And then by default, it's also going to select instant execution or market execution sometimes, and that's what you keep there. Then you move on to the lot size. Now, lot size should be the same as the sell order from placing. So if the calculated lot size will be lot size 0.50, you change it to 0.50. As long as they're the same, it should always be, they should always match. The lot size should never be different. They should always match. So if calculated lot size to be lot size 1.00, that's what you edit here. But this time you're going to place buy. You follow?
Okay. Yeah.
So by doing this account is going to have a buy. Then in the other account that you from is going to have a sell.
Okay. I get the point.
So in doing all this, you do all this 1 minute before the news event happens. So if the event is happening at 13 hours, at 12:59, that's when you start placing the sales and the buys. So approximately you have 30 seconds to execute them.
Okay.
Yeah.
So immediately, so when you place the orders at 12:59, so immediately when it hits 13, you close the position that's in loss, and you close the position that's in profit.
Yes, but for the extreme SNB, where there's a loss, there's no need to close it. It's going to close itself. So when you see that, when you see that there's red going on, just don't bother closing. Just switch to the other side, and you're going to see blue in that account. That's why you close the orders, the positions.
Okay.
Yeah. So yeah, you pretty much have 30 seconds for each buy and each sell. The same thing applies with the SNB. So 30 seconds for a buy stop, 30 seconds for a sell stop. It should never be beyond 1 minute. 1 minute is also the boundary. So you just need to keep practice so that you can get used to placing these within 30 seconds for each.
Okay, so in short, this strategy is all about timing.
Yes, exactly.
Okay. I didn't understand what you said by if there's a loss in another account and there's profit in another account, how will the loss be closed?
The loss is closed when your balance drops to 0.
Oh, you let it until you drop.
Yes, because our whole idea is to lose money in one account, and in the account where there's profit, we're going to gain what we've lost, plus much more on top.
Okay. Now I've get the point. So in short, you're saying, for instance, I've got a $10 in another account and a $10 in another account. So I let that $10, I blow that the other $10, then I will gain it in another account.
Yes, exactly.
Okay. I've now understood the point.
Yeah, that's the secret. So yeah, that's how the SNB works. Do you have any questions before we end this session?
No question.
Okay. All right. So for the next session, I think we can have it on Sunday. Since tomorrow is Christmas, we can have it on Sunday.
Okay.
With that, we can enter into the app that I use, Google Clock, which is this one. And we can touch on investing.com, when to know when the news events are happening, and also how to pick currency pairs. We'll answer all that in the next session.
Okay.
So for this session, we are done. I was recording this session, so I'm going to upload it to my YouTube channel and I'll send you a link.
Okay.